Protesters in Hong Kong took to the streets in demonstrations that are continuing for the 11th straight week. Tens of thousands of pro-democracy demonstrators marched in Kowloon yesterday. Meanwhile, more than 100,000 pro-police demonstrators also gathered. More massive protests are planned for today. So here to further discuss if Hong Kong protests will have an economic impact on the U.S. is Brent Wilsey from Wilsey Asset Management. Brent, great to see you.
Good to be here.
Set the table for us.
Sure. I mean, what's going on, we see this on TV, and I kind of think back to the Vietnam War. We had, pictures of people being killed on TV. Well, now we're seeing this played on TV, and it scares people because what is going on in the world? And what's actually going on, let's try to explain that to people, is that, China wants to control Hong Kong. We have the extradition, which they want to do, which Hong Kong says, no, we don't want to be extradited back to China, communist China. So it's given problems because there's a lot of free companies and public companies in Hong Kong that are doing very well. China wants a piece of that action.
Oh, I'm sure they do. Okay, this past week, we saw a drop in the Dow of 800 points. And people are, sky's falling.
Yeah, sky is falling.
How much did the situation in Hong Kong have to do with that fall?
It had a part to do with it because everything's going on here. We've got the Hong Kong situation. We have the fear of the inverted yield curve. Oh my gosh, we're going into a recession. I mean, how can things get any worse here? And what's actually happening now? People get this information so quick, especially traders, by tweets. We know that the president tweets all the time. Well, now they get an immediate reaction on markets, so you get this high volatility in the markets, but it's also causing it. This is August, and in August, your traders, you're what they call market makers, they go on vacation. So therefore, they're not there to support the market. So we're going to probably have more volatility. That's why August is one of your worst months throughout the year in trading.
So you think volatility will continue as long as these protests are going on? It
will continue as long as these protests goes on because, again, we see it. And how many days you said it was? I mean,
11 weeks.
11 weeks, and it just keeps going on and on. Right. And it's concerning because we don't have a result. And also, this takes away from the trade talks because now China is dealing with two things, and this is more of a concern for them than perhaps the trade talks with us. So you've got a lot of moving parts going on. That's kind of scary for people right now.
So what does all this mean for our wallets?
Well, what it means is that do not panic because again, if you've got some high risky companies that are dealing in China, you might want to sell those and be a little more cautious. But what you want to do is say, do I have good businesses that produce in the U.S., that are very good in the U.S., not overpriced? You're going to be fine, and check your 401k. Make sure you don't have anything crazy in your 401k as well.
So what you're saying is stay the course unless you have one of these.
Yeah, talk to your financial advisor. Make sure that they say no. You don't have the high risk investments. You've got good quality businesses. You've got good quality stocks. You're going to be okay. We just got to wait out the storm here because this will pass.
Yeah, it will pass. Yeah, but there's the current volatility we're seeing in Hong Kong. Is there a plus side, an upside for us, an opportunity for us when it comes to investing?
Well, I will tell you, last week we made some big buys last week. So we like the volatility because we are long-term investors, so we don't panic about, oh my gosh, next week it could be lower. Right. Maybe it is, maybe it's not. But we're saying, where will we be 12, 18, 24 months down the road? We will take advantage of opportunities like this because the market volatility.
So you saw, in layman's terms, did you see stocks significantly going down, so you made the choice to purchase them, knowing that in 16, 18 months, they're going to be up?
Yeah, I mean, could you see the valuation ratios of these businesses? They're so good. And the businesses, our economy is still doing well. Businesses are reporting good earnings. Corporations in the U.S. still have across the nation, the S&P 500, about $1.7 trillion in cash. They're making money. The debt is down. So we've got some good businesses you can invest into, but you got to be careful of the high flyers. Like we always talk about Beyond Meat was way high. Now things like a 140. Stay away from those crazy ones because they can go up, they can go down, and just you need Dramamine when you start investing in those.
You need to know what you're doing when it comes to investing, which leads me, do you have any seminars coming up?
Yeah, actually we do. We've got one coming up this Thursday at 6:30 in Scripps Ranch, and they can sign up for that at our website, smartinvesting2000.com. And we talk about all this stuff to kind of reduce the emotions for people because it is a very volatile time right now.
Yeah, these seminars, they are very helpful, very informative too. All right, Brent Wilsey, Wilsey Asset Management.
Thank you.
Thanks.